Alright, good afternoon everyone. Today is Monday, December 19th, 2011. We are going to go over the trade. We only took a single trade. The trade we took in a live trading room this morning, the trades that set up, the trades we took, the trades we didn't take, and all that good stuff. Let me start with the results. We took one trade and we lost. We had a losing trade, minus 2 points for 3 contracts, minus 24 ticks. Alright. Now let me scroll back to where that trade was. You see it was right here. We had chopped inside this band. We have very low volume today, by the way. We had chopped inside this band right here. And once we got up above it, the BBC got above the band, the zone we'll call it. And we had our first pullback down to the BBC. So we went long right there. Unfortunately, it never had a chance. The thing just dropped right out from underneath us after that. That happened to be right about the same time that Draghi had recommended that the European Central Bank not buy any bonds. That's what triggered this right here, I believe. He was starting to speak right here at 10:30. He was supposed to start to speak, and I believe that's why it was choppy right here leading up until then. And then unfortunately we were on the wrong side of it. After it fell down, or even before it fell down, while it was chopping around, I'll show you what we did do. One of the partners in a room had said back here, when let me scroll over just a little more, when the trend strength line on the DMT was down below the envelope like this for an extended period of time, the expectation when that happens is that when it pierces the envelope, it's going to be a significant move, one way or the other. Whatever way the envelope says is going to be a significant move. So he had the foresight to say, well, if we were going to put in a buy stop and or a sell stop because it's going to be a significant move in one direction or the other, where would we put it? And at the time, which was it was actually before it actually started to fall, it was right about in here somewhere, I had said, well, if it goes up, if it goes up, I would buy up above here. And if it's going to drop down, I would put a sell stop down here. Well, you can see what happened. It went down. We pierced the envelope from the bottom, right here on the 10K. On the 10,000 contract chart, price was at about 1211.5 then. Expecting a 5 to 6 point move down, which we obviously got. But after we pierced the envelope, it did drop down to this level, where I had said, this is where I would consider putting in a sell stop. If you had done that, the sell stop would have been at about 1209, and it dropped all the way down to 1202 quarter. All right. That said, we didn't do this live in the room. We didn't do a live anywhere, but we did say that that's where we would have done it had we had done it. And you can see after the pierce of the envelope, we did get our 5 to 6 point move down as well. All right. In the break period, there was a little bit of a move right here with a bubble. We had a fresh bubble coming off the band right there. We had a fresh bubble, and it bounced up to the BBC right here. Off of the BBC, it went down more than a point. So you would have been having your stop at break even, which is where you would be right now. You'd be out of the trade break even at this point. If anybody has any questions about anything that I'm saying in here, type it out there. Type it in the box right now, and I will try to respond to you as quickly as possible. All right, on the YM right here, this is the first actual pullback to the BBC. So this right here would have been a trade setup after the bearish cross way back here at about 10:30 right here. This was our first actual pullback that touched the BBC. Okay, on the YM. The piercing of the DMT by itself is not a signal. No, what you look for when you get the pierce of the DMT by itself, then you start to look for trades in that direction. That would, you can add points onto it, for instance. Same risk, like this one right here. I know it wasn't an actual setup, or we didn't actually take it because the cycle wasn't in favor of it. But right here, the pullback up, the pullback up here to the BBC, anticipating that you were going to get from 12 11.5, anticipating that you were going to get a 5 to 6 point move down, which would have put it down to 1205.5. Right here at 1208, you could have gone for 3 points instead of 2 points, Jeff. Okay, that would have been the thing to take out of that piercing of the envelope right there. Now, if we go over here and we look at the 2100, there was another thing that we did. I think I took the lines off. I think I took the lines off the chart. Okay, I'll tell you that in just a second, Jeff. Okay. On the 2100, yeah, I did. I took the lines off. There was a trade set up in here if you weren't going right into the weekly trading zone. The reason we didn't take it is because of the zone right here. But after we had the bearish cross, there was a pullback up to the BBC right here. The risk would have had to have been up here, and the target would have been down here. Okay? You can see it went through the target. It went toward the profit target a little bit and pulled back quite a bit from that first push, which probably would have stopped everybody out with +1 tick if they were trading it the way that Mike Ard normally trades it. But if you held on to it, then you would have gotten your 5.25 points right there. Okay. Now, as this one pulled back here, the cycle was going against it, so there wasn't the best opportunity to trade right there. But if you wanted to trade right there, you would have been looking for a bounce from right here at the BBC down to the weekly trading zone where we are headed right now. And the other question is, what does the cycle have to be to signal? On the 10K, I don't like the cycle to be going against you. I prefer, if you're going to be taking a short off the BBC, I prefer to have the cycle red and headed down, not totally oversold. Okay? That's what I would prefer to have. Like right now, I don't like the cycle right now is saying, we may be going up right here, so we don't want to take that. Okay? Over here on the YM, as I said, we pulled back right here to the BBC. This is the first pullback to the BBC after the bearish cross. We would anticipate it getting at least to the MA1 right here. Okay? After it gets to the MA1, well, the MA1 may hold it and bounce it back up, so you'd have to be careful for that. Let's see, what other things did we do this morning? I didn't go over the early morning stuff here in the 4-tick range because there just wasn't any to go over. There was nothing in there. It was a bunch of chop. We never got out of the box. The only opportunity that there went right into the weekly trading zone, so that disqualified the trade for us. We weren't going to trade it. As I move over here, that's it. We got nothing. We have nada. Now let's see. That's pretty much it. Does anyone have any more questions? Anyone? If you don't have any more questions, then I'll stop the recording. You see the price just got down to the MA1 right there. Okay, now we're getting on the other side of the MA1. That's good. If we get a close, you see how many contracts we have left in this bar. If this bar closes down below the MA1, then I would anticipate this moving all the way down to the zone. Okay, this needs to close down below the MA1 there, and the 2100. Same thing. It's right at the MA1. So we need to see these things move down just a little lower and close there, and then I would anticipate some more downward movement to the actual zone there at 1201, 1202. Okay. With that, I think I'm going to wrap up the recording part of this. All right.